Good morning, everyone. We just want to give persons a few more minutes because other persons are still coming into the room for us to get started this morning. Good morning, everyone. We just want to give persons a few more minutes because other persons are still coming into the room for us to get started this morning. Good morning, everyone. Let's see if I can just want to give persons a few more minutes. Echo. Because other persons are still coming into the room for us to get started this morning. Good morning, everyone. Let's see if I can just want to give persons a few more minutes. Echo. Because other persons are still coming into the room for us to get started this morning. Good morning, everyone. See if I can just want to give persons a few more minutes. Echo. Because other persons are still coming into the room for us to get started. Good morning, everyone. See if I can just want to give persons a few more minutes. Echo. Because other persons are still coming into the room for us to get started. All right. My apologies about that. We are just giving, like I said, persons a few more minutes to get into the room and online on the YouTube, and we will be getting started in a few moments. We are just giving, like I said, persons a few more minutes to get into the room and online on the YouTube, and we will be getting started in a few moments. Okay. All right, let's see. Am I still getting an echo? Okay, can you hear me okay? Just give me a thumbs up if you can hear me fine. I just want to make sure I'm still not getting that echo we were getting before. Still getting an echo? Okay, can you hear me okay? Just give me a thumbs up if you can hear me fine. I just want to make sure I'm still not getting that echo we were getting. Still getting an echo? Okay, can you hear me okay? Just give me a thumbs up if you can hear me fine. I just want to make sure. Okay. All right. All right. Is that better without any echo being added into it? Okay. My apologies. They give me all these newfangled dangle toys, and sometimes it becomes a lot. Okay. So I just want to open with a quick word of prayer, and then we'll get started this morning. Heavenly Father, thank you for your grace and mercy, O God. I thank you for those that have joined us for this training today and those that will be joining us. We pray, O God, that the information that is shared, O God, will be beneficial to them, O God, that it will assist them in helping them to have a better understanding when it comes to VAT filing, O God, and all that is shared this day. In Jesus' name I pray. Amen. Firstly, again, we must apologize for the delays that we've had inside the continuation of the training. A number of unfortunate things had come up that had delayed us, but we are, as we said from the very beginning, determined to make sure that this training goes forward and that the information is shared because it is necessary. Our last training, we were talking about the VAT invoices and the VAT registration process. So today, what we are going to be continuing with is basically discussing about the VAT filing process. Now, one of the things we said for all of the training was for persons to understand. Most of the training would be anywhere from an hour to maybe 2.5 hours. The most would be 3 hours, and that depends on the depth of the subject. I think today would probably be one of our longest subjects because we want to go through all aspects when it comes to the VAT filing process, which would be from our OTAS system along to basically when you're going through each of the different lines and what you require and what is needed from you as a VAT registrant, what is needed from you when it comes to the filing, and what is also needed on our part as well. So just to remind persons of how the setup of the training and everything is at the end of the day, for each of the modules that we go through, you will receive at the end of the training a PDF link that will have the notes from the training. we made available to you any of the YouTube videos for the sessions that we do as well. And if you are interested, we'll also share with you the quizzes that come after each module. In order for you to get your certificate at the very end, you must complete all of the quizzes for all of the modules and get at least a 70% and up. Want to make sure that even with sharing the information, although it's not mandatory, that at the end of the day, you have the opportunity to go through the information to make sure that you understand. At the end of the entire training, we'll also be sharing basically a feedback survey that we want your information to know that if the training was useful, if it was helpful, ways that we can improve it at the end of the day, because the Department of Inland Revenue is determined to make sure that we assist all of our clients, our customers, and the public to make sure they get all of the information necessary to be able to be compliant when it comes to their VAT filing, real property, and business license. So most likely we will also be repeating this type of training over the course of the month in the future for real property and also for business license. So we want persons to be able to make sure they get the best benefit from it as we go through the information. So I'm just going to share my screen. Okay. This is if you can see the screen, just give me a thumbs up. I just want to make sure that you're able to see the module. I can see YouTube is able, and the persons inside the room are able as well. Okay. So just to repeat and go through, um, we are now on our fourth module. We have about another, I would say another three modules basically, because we're going to be combining two of them because they can work hand in hand. So we'll be doing module 4 today, which is the VAT filing process. Module 5 will be the payment process. We'll go through module 6 and 7 on Friday, and then we'll complete on Monday with our VAT withholding process. Okay. And today's module, of course, is the VAT filing process. Okay, so our objectives today are to help you understand the VAT filing requirements. We'll go over output versus input VAT, what they actually are, the flat rate and regular filing, how to file VAT, common filing mistakes, and then we'll go through a practical examples and actually a filing simulation of basically an example of what it was if you have your business running and you have to do your outputs and your inputs at the end of the day and what that actually looks like. Over the course of the training, since we are actually starting on time today, we'll most likely take a break. I would say possibly about 11:20, about a 10-minute break, and then we'll pick up and continue from there once we see how far we actually are. Any questions so far? Just want to make sure persons can actually hear clearly. On the YouTube, if everything is clear, visual and audio, just give me a thumbs up, somebody. And inside the room, same thing, so that we can get started. If you have any questions, we encourage persons to please just put the questions inside of the chat, and we will answer the questions to the best of our ability at this time, as well as we should have some help from our general processing persons who will be able to also answer any questions that you may have. And if we're not able to answer them during the training, we encourage you to email them to us. We'll drop the email throughout the training, and we'll follow up with the answers to you as soon as we can. Okay. So let's get started. So let's talk a little bit about the VAT filing requirements and what it is that we're trying to do. So the first thing is we want persons to be compliant. It is not the department's desire to have to be behind persons necessarily when it comes to filing. We want persons to mandatorily be compliant and to understand that they have a responsibility in doing so. We want persons to be able to get the information they need and make sure that they are compliant with how they do their work. And if they don't, then unfortunately, we have our compliance units and other things, investigators that come out. But the whole goal of what we're trying to do is to make sure that we improve compliance voluntarily, which means helping persons understand what they need to do when it comes to their business license, their VAT, their real property. But dealing with VAT specifically, this is one of our main goals. So, taxpayers' obligations. First of all, if you are a VAT registrant, you're required to make sure that your VAT certificate is displayed in a prominent place where persons can easily see it, as well as you have to make sure that your VAT, any pricing that you send has your VAT price included inside of it. You issue valid invoices and receipts. This is also for other VAT registrants or other persons that are just coming and utilizing your services. You have to maintain proper accounts and records. And we encourage persons to always, well, not encourage, if you're a VAT registrant, you're required to have an electronically based accounting system to be able to keep track of the things that you utilize. We encourage persons to file accurate and timely VAT returns so that you don't receive any penalties or anything that comes with it. And definitely based on the VAT output and input calculation to pay to the government any of the VAT that you may have collected on our behalf. And of course, if you are not registered for VAT and you're over the threshold, which is 100,000, we encourage persons to make sure that they register, which is their mandatory registration, as well as if you are a business that's below the threshold, but you still would like to have the benefits of being a registrant, you can do so by voluntarily registering. And just a reminder to persons, if you do happen to be over the threshold, but for whatever reason you have not registered, it is within the power of the comptroller to forcefully register you. So we would like persons to voluntarily register, not have to go through that process. Of course, you're also responsible for on-time filing, correct reporting, making sure that the information that you submit is up to date and correct, and then making sure that you also pay on time so that you don't have any penalties as well. So just a couple of reminders of persons when it comes to information and finding information that they need. Of course, on our website, inlandrevenue.finance.gov.bs, you will find basically for real property tax, VAT, bill, business license, and you may hear me repeating this a couple of times, all of the general guides, the industry specific guides, the VAT acts, the amendments, the regulations and the rules, all of those are available on our sites. And we constantly update our site with any new amendments, any new updates. As you can see from the picture, we have amendments that started from 2011 up to this point, as well as all of the different acts that will affect you as a VAT registrant, any person that is actually in business, doing business at the same time. In addition to that, we just want to remind persons if at any point, as you're going through the process to register for VAT, or not just register, to file for VAT, which we're talking about today. We also have our general VAT guides, which tells you what each line is actually for. And we're going to go through that guide today, just explaining some of the different lines so you understand what you need to do when you need to actually calculate and put the information in correctly. So what is the VAT filing period? Filing period is the span of time that your VAT returns covers. And the businesses in the Bahamas are assigned either to a monthly or quarterly VAT filing period based on their total annual turnover. Over 5 million, you would be on a monthly filing basis. Under 5 million, you would be on a quarterly filing basis. We do have a section for our large taxpayers units for persons that are over 5 million, but that is only by invitation. Their filing period usually would fall on the 14th instead of actually the 21st. And the comptroller of VAT can direct a business to file monthly, even if they're under 5 million based on their compliance risk or the type of business that they're actually doing as well. So say, for example, your VAT period ends on January 31st, then you would have until basically February 21st to make sure that your filing is in order and has already been submitted and actually paid for, because you have to pay for the same time that you file. And the same thing, if it was March 31st, then of course your filing date would be actually April 21st. And if the 21st does happen to fall on a weekend or a public holiday, then the return would definitely be on the next working day. So let's ask the question. What happens? So what happens if you file late? The late penalties apply after the 21st day. So we've been encouraging persons as we've been going through the training to make sure at the end of the day that you're able to make your payments and your filings before the deadline. Meaning, if you're filing on the 21st and you're paying on the 21st directly onto our website through the OTAS portal, then it's most likely you'll be fine because the payment would register directly with us. If, however, you see that you're trying to make your payment through the bank, we encourage persons, if you're paying to the bank, make sure your payment arrives at least 2 to 3 days before the filing deadline, because what will happen is if you file on the 21st and pay through the bank on the 21st, the payment will not hit us until maybe 2, 3 days later, and then you will incur a late fee. And the reality of the late fees is, unfortunately, um, we can only apply the payment once it's actually hit our account. So we encourage you, if you are using the bank, to please make sure at the end of the day that the information you provide is correct to them. And they also apply the information to the correct account. Because again, we have a number of accounts for the Department of Inland Revenue alone, and then the government has a number of accounts. But as we go through the training, we'll reflect again on the actual account that you need to utilize to make your payment. Of course, late VAT return administrative fines can be up to $500. A late VAT payment can be 10% penalty plus interest, depending on the minimum rates that apply. And failure to file after a demand can be criminal charges as well as prosecution. So we encourage persons to the best of their ability to make sure that they're filing on a timely basis. Okay. Just give me one moment. I want to take these things. So some good practices we want to encourage persons. First of all, to make sure that you're tracking your filing dates with maybe a VAT calendar so that you're able to see what you need. To file early to allow time for any technical issues with the OTAS. And we encourage persons to communicate to us through the OTAS if there's any issues. Confirm return submission with the OTS email or printout. If you've already made your payment, and you haven't seen a return submission, we encourage you, before you make another payment, contact us so that you don't end up paying twice if you see that you don't receive the email. There shouldn't usually be any problems, but if it does occur before you make your payment, I would encourage you to contact and communicate with us, because we don't want it to be at the end of the day. And this is why we encourage you to do it through the OTS to make sure at the end of the day there are no issues on your part, on ours, so that you're able to file as easy as possible, and to prepare your documents monthly, even if the filing is quarterly, which will also make it easier for you when you actually have to do your actual filing. Okay. So let's just talk a little bit about some of our tax laws that we operate by. The principal acts and the principal regulations came into force into different years. Of course, initially, we're celebrating our 10th anniversary of VAT right now. So our first VAT would have been in 2015. then the Business License Act of 2010, Business License Act of 2023, and Real Property of 1969. All of these conjointly together affect what operates when it comes to VAT and your VAT filing. And then we have our amendment acts and amendment regulations that came into force as specified in the law or the regulations. In addition to this, in the act, we also have our VAT rules, which guide you on what would be considered output, input, things that may necessarily be exempt. And then we have the consolidated acts, consolidated regulations, and orders, especially special economic recovery zones, whereas you may not be charged for VAT doing a particular hurricane. Say for Dorian example, when Dorian occurred, we had persons from contractors that were bringing in building supplies, and there were no VAT or anything charged on those particular things, but they were still required at the end of the day to still file them a part of the zero rated items, even though there was no VAT charged on them, just to take an account for it. We also want to talk a little bit about today about taxable standard rated items, which is 10%. And now, in addition to this, we also have the 5% items, which would be non-prepared food items that are consumed by humans. Let me repeat again, non-prepared food items that are consumed by humans only. And then, of course, we have our zero rated items, which would be our first schedule when we can claim full input VAT. And then we have exempt items, which are second schedule to VAT Act. No output VAT is collected, no input VAT is available unless the business has mixed supplies and the apportionment rules apply. That is, they can claim a portion of input VAT against the taxable supplies. So, general rule number one, if you are a VAT registrant, everything is taxable at the standard rate unless specifically determined otherwise. As long as you are doing any type of service, everything that you do would be taxable unless, of course, the act and the rules guide you to say that those particular things that you are doing or those particular things that you are utilizing as a part of service are otherwise not taxable. For example, of course, you would have your zero rated items per the first schedule, and we'll look over some of those. And this is from the VAT Act for 2014. And then you'll have exempt as per the second schedule, the VAT Act for 2014 as well. Then, of course, sometimes we have temporary measures such as the Special Economic Recovery Zone Order that was issued, which was in effect from December 2019 to December 2022 from Dorian, as well as when we had the COVID that actually came about. And then you had special agreements such as heads of agreements. And of course, we have our VAT holiday, which is our annual back to school VAT holiday on school supplies and different things like that. So if you're not sure, we encourage you, follow the money, see if the activity is listed in the first schedule as zero rated, or see if the activity is listed in the second schedule as exempt, and find out if there are other possible contributing factors as well. So on our first schedule, we have our zero rated items. These are subject to certain exemptions. Zero rated supplies are taxed at 0% and primarily include exported supplies of goods or services. Of course, the list used to be longer, but when we moved to the 10%, a number of these dropped off of the zero rated items and were falling under the 10% rate. So let's just look at a few of them. So subject to the exempt rate, of course, you have insurance, financial services, medical for public, education, rental of a dwelling, daycare or aftercare, services to the aged, indigent, infirm, disabled, or handicapped, religious services, registered charity, games of chance, lotteries, gambling. What I want to say quick on this, what you may have, for example, is an institution that is exempt from VAT, but they still supply certain type of services that are basically still valuable. Say, for example, a school. A school is VAT exempt, so they can't charge VAT. So it doesn't matter how much tuition they make. At the end of the day, they aren't able to actually use that as output and input. However, they may have a tuck shop or they may have a bookstore which sells books and supplies. Of course, that would be a license that they would have for that. But a part of the institution, that part of the institution's income would be then vatable and that part of the institution's income would be what they could claim input or output VAT on once that goes beyond the actual rate. They could not include the tuition or any of those other things. And we'll get to that as we go through the training today as well. So just some key definitions and stuff that we want to keep in mind as we're going through the training. The first of all is what a person is, referring to the VAT Act, when the VAT Act differs and refers to an actual person. So a person would include, of course, the government, a natural person, a corporation, a company, a trust, a partnership, or an unincorporated association or body. A registrant means, of course, a person who is registered pursuant Part 4 of the VAT Act, meaning that they've actually registered with the Department of Inland Revenue and is considered a VAT registrant. Now, we've said this before in the previous trainings, and I will repeat it for every training that we go through. If you are not a VAT registrant, first of all, you should not be charging VAT. And if you go to a business that is charging VAT and they are not a VAT registrant, you have no legal obligation to pay that VAT, which is why there's penalties that also come into place if your VAT certificate is not displayed where persons can actually see it. So you're required to make sure at the end of the day, not just the fact that you're charging VAT, you have to make sure your certificate is displayed so persons know that you are a legitimate agency that is actually charging VAT. If you are charging VAT at the end of the day and you are not registered to charge VAT, that of course it can be finable as well as it can cause you jail time. So we're encouraging persons to make sure that the businesses that you are operating and dealing with, first of all, are properly registered. And we have a listing on our website, inlandrevenue.finance.gov.bs, whereas we regularly update the list of registered VAT businesses as well as those that may only have a TIN, meaning they have a TIN, they cannot charge VAT. They may have to be able to claim VAT depending on the type of business they're doing. But we have those listings that are available on our website where you can see to make sure a business that you're dealing with is a registered VAT registrant. Because at one point, and the reality of it is this happens, a business may be registered for VAT and may apply to deregister for VAT, whether it's due to the business falling under the threshold, falling on hard times, not doing business. And then when they start business again, what happens is because they were previously registered for VAT, deregistered, they don't have their certificate available to them, or because persons have just been used to them charging it, they don't question whether or not this business is still valid to be registered for VAT. So we encourage persons to constantly make sure they still check the listing we have, because as businesses are on or off the list, the reality of it is you want to make sure that you are being charged fairly as a consumer, and we want to make sure that the businesses that you are doing business with is charging fairly for the funds that they're receiving at the same time. And then, of course, we have a taxable person, which means it's a person who carries on taxable activity and is registered or required to apply for registration under Section 19 or Section 20, which means most likely there's someone that basically is over the threshold and they've mandatorily registered, or they're over the threshold and most likely end up being forcefully registered. The comptroller or comptroller VAT means the comptroller value added tax referred to in Section 12, a VAT officer or authorized person acting on behalf or under the authority of the comptroller. In this instance, our comptroller would actually be our financial secretary, Mr. Simon Wilson, and our chief acting valuation officer would be Ms. Chandra Strawn. Now, according to this, is also a VAT officer or authorized person acting on behalf or under the authority of the comptroller. That means any officer or any individual working for the Department of Inland Revenue also acts in the capacity of a VAT officer. And we are also required, if we enter a business and do not see the business license properly displayed, or if it's not up to date, as well as the fact at the end of the day, your VAT certificate is not properly registered, to report that either to our compliance or investigations department. And so I'm saying this whether it's staff or persons in public to understand. This doesn't mean you go in and bully persons' businesses, but it does mean you have a responsibility at the end of the day to make sure that every business is acting in good notice and in good ways so that everybody is treated fairly when it comes to being not just taxed, but the type of business that persons are doing. And of course, turnover means the total revenues in monies and monies worth accruing to a person from his taxable activities during the preceding 12 months or fewer months, including all cash, credit sales, commissions, without any deductions, whatever. That means your turnover is not after expenses or what is left. Your turnover is what did you make as a whole before any deductions, before any expenses, before any dividends are paid out if you're an incorporated business and you have shareholders, any salaries, any type of that. What was the total that you made as a business for the supply or for the service that you actually provided? And then, of course, we have mandatory registration. This exceeds of guests. We talked about this before in section 19. This means you exceed the registration threshold of 100,000 and you're reasonably expected to register or within the 365 days. Say, for example, your business within its second or its third quarter, it looks at you're about 80,000. And based on the type of business, you know that you're going to go over. We encourage persons to register before that happens. After you've already crossed the threshold, you only have 14 days to actually register without actually occurring any fines or any penalties if you found out that you've gone over the threshold and you didn't actually register. And then, of course, when you register, that means any businesses that fall under that particular TIN, not just the individual business license, the TIN. Again, and I'll keep going through this because we want persons to get this. It is not your business license that you pay VAT on, it is your TIN, which is your tax identification number. Say, for example, you're a sole proprietor and you have 5 businesses under that particular TIN. Each of your businesses may be less than 100,000. One may be 10, one may be 20, one may be 50. But if collectively those businesses go over the 100,000 under the TIN, that is what you're paying VAT on, the TIN, not the individual business. So that's why we encourage persons, however you're managing your businesses and how they fall under your particular TIN, to pay attention to that because it's not the one individual business. Because sometimes we have persons on a family island that may say, well, this particular business I have, it's only making $5,000. Or this particular business I have, it's only making $10,000. But then when you collectively add up the fact that Granny got Granny hair supply, toe supply, shoe supply, book supply, cookies, bacon, and everything else, collectively, those businesses under that particular thing, even though each of them have an individual business license, they collectively are over the 100,000. And then say, example, Granny got in business with Annie and they have a partnership, then that particular business is a different entity and that would have a separate TIN. But if Annie and Granny together as a partnership only making 50,000, but Granny's individual sole proprietor businesses are making over 100,000, then she will pay VAT and is required to register for VAT on the sole proprietorship, but the partnership, which is still under the threshold, would not be required. And not just the business that goes over. That means every single individual business that's under that TIN is required to register for VAT. And then in addition to that, every business under that TIN is required to actually charge VAT and make sure that they're VAT compliant. Any questions about that so far before I move forward? I'm trying to take my time as we go through because I know it's a lot of information, but at the same time, we want to make sure at the end of the day that we're answering any questions about this as we go through, because we want to make sure that the information that we're sharing is clear. And at the same time, we're not rushing it so persons don't get it. Okay. And then, of course, you must register even if under the threshold, if you fall under one of these categories: a pool of rental properties, marketplace for vacation home rentals, a non-Bahamian homeowner who supplies a vacation rental and does not use a marketplace for that rental, and of course, the government entities as well as required to actually register. And then we have voluntary registration, which means you must satisfy the comptroller that the business has a fixed place of abode or business within the Bahamas from which they carry on or intend to carry on a taxable activity. They carry on and intend to carry on a taxable activity is likely to be entitled, if granted registration, to claim input tax deductions on input tax paid, and is able and willing to keep proper records as prescribed, and is able and willing to submit regular and reliable VAT returns in accordance with the VAT Act. So let's just do a quick registration exercise. A person is currently not registered for VAT. Say they just landed a contract with the government of the Bahamas and to deliver their services to them for about $8,500 per month. Now, when you sit and you calculate that $8,500 per month, where does that actually bring them? So $805,000 per month for 12 months. I'm not gonna lie, brain a little tired, so I use my calc. That would bring them approximately to $102,000. So the question is, if they're running their business for an entire year, then they are going to be required to register for VAT. If the contract runs from November 1st to December 2026, then definitely they know that they're going to be over the threshold. And so because of that, they would be required to register for VAT because they know that the contract that they have with the government will take them over the threshold one way or another. Now, say, for example, so the answer is, of course, they must register because they know with certainty with the business that they're doing that they're going to exceed the 100,000 mandatory registration threshold within the subsequent 365 years. Section 19(1)(b) of the VAT Act states that a person making taxable supplies in the course or furtherance of a taxable activity must apply for registration when, at the beginning of any period of 365 days, has reasonable grounds to expect to obtain from the taxable activity carried on by him during such a period a turnover in excess of the registration threshold. If you're doing business with the government or any other business and you see at the end of the day that you know that you're going to be over the threshold, then you're going to be required to actually register for VAT. Instead of waiting until you actually get to that place, it's always best to do so. That way, again, you can avoid any penalties or any fines that may actually come up during the course of the business that you're doing. Okay. Forgive me, my mouse is playing Bo Peep. So if at 8,500, we were at 102,000, then with 8,000 over the course of 12 months, that's going to be 96,000. So then in that instance, you know for a fact that within those 365 days, your business will not go over the threshold. So you won't be required to register for VAT. However, you still have the option, if you are still desirous to be able to claim any inputs as well as any outputs at the end of the day, to be able to make sure at the end of the day that you still register, because you still will be doing business and have the benefit of actually claiming input and output VAT on those things. So things to consider: do they make taxable supplies to other business besides the government? Do you have any other line of business? And like I said, for example, you're a sole proprietor, but you have a number of different businesses that you're actually operating under that same tin, which means that, say, for example, a person that was getting the government contract for the 8,000 for 12 months, they only made $96,000, but they had two or three other clients at the same time where each of those other clients was giving them 2,500, which means collectively they would have gone over the threshold. So that person would be required to actually register for VAT. Again, what is the combined annual turnover from all business lines? And you must consider the entirety of the person's business activities when determining whether mandatory registration applies. If the government contract was the only source of the person and they were required to register, will they be required to register? No, because their annual turnover would have been less than 96,000, would have been 96,000, pardon me. The person may voluntarily register, but it's not required for them to actually do so. Okay. So we want to go through our output versus our input for VAT. When we are finished with this, we're going to take a short break because this is going to be a little extensive for what we're trying to make sure we go through all of the acquired information. Um, any questions so far? I'm trying to make sure that we're going through, like I said, at a reasonable pace to make sure any of your questions and stuff are actually answered. Okay, I take that as a we are good. All right. So output versus input VAT. Calculating VAT payable or refundable. What does it mean? At the end of each VAT filing period, a business must determine one, how much VAT did they collect from their customers, or in other words, what their sales were. What funds did they make from the sales of the products or the services that they sold to clients? And two, how much VAT is paid on business purchases, meaning how much VAT they paid for any services they may have gotten from another VAT registrant, or how much VAT they paid on anything that they may have brought in and imported that they required for their business to actually operate. And this is where we have to remind persons, you cannot collect VAT from someone that does not, one, is not registered to charge VAT, two, does not provide you with a VAT invoice. So when we went through VAT invoices, we encouraged persons and reminded persons, you have to make sure at the end of the day that you collect from the business that you're partnering with, you're working with, you're getting services from, that they provide you a VAT invoice. And we went through all of the details in the module. So if you have not received that particular module and you're interested, please let us know and we make sure that we can share those links to you because we want persons to have this information. Because on the VAT invoice, there are certain things that's required from the business, from them to make sure that it is a VAT invoice. And you, as the person receiving it, needs to make sure that a VAT invoice is also correct for your part. So when you have to do your filing, that your invoices and everything can be properly accounted for. And then, of course, the difference tells you what is owed to the government or if you're eligible for an actual refund. So what is VAT output? This is the VAT you charge your customers on sales of goods of your services. It's collected on behalf of the government and must be reported in your VAT return. So for example, say you sell something for $10,000 worth of services, and of course you charge 10% VAT. Then your output VAT from this sale would be $1,000. Because basically what you would be charging the client would be the 10,000 plus the 10%, which would be $11,000. And so that 1,000 that is made on that sale, which is the VAT, that is what would be your VAT output. That would go towards the government. And so let's look at your input. So say for the same thing, the VAT you paid on the purchases of goods or services used in your business, you can claim input VAT only, and I say this again, only if you have a valid VAT invoice and the purchase relates to a taxable supply. If it is something that is not taxable, like say school tuition, you can claim VAT input on that. If the business that you are doing business with is not a VAT registrant. Now, I say this again and again. Please understand. If the business you're doing business with is providing you invoices and they are not a VAT registrant, you cannot claim input on that for two reasons. First, they're not registered, which means they legally do not have a right or the ability to give you VAT invoices. And secondly, they are illegally operating by providing a VAT invoice to you. The third thing to keep in mind is, I have to keep reminding persons about this. You want to make sure that that business is registered because when you go in to do your VAT input versus your VAT output, you cannot come to the department and say that the business that you did business with wasn't registered, although they were charging VAT. If that was brought to our attention, then we have a department and a unit that would deal with that. But if it wasn't brought to our attention, even in the cost of us doing our work, and you continue to do business with that person, any of those invoices that you received would not be valid invoices, and you would take basically the loss of that input from that VAT that you can't claim. So in this example, you brought equipment for 5,000. Of course, the person charged you 10,000, which means you paid 5,500. And so then when you go to do your input VAT, the input VAT would basically be the 500. That would be what you would be able to put down as your input VAT for any of the purchases that you made or any of your expenses for your business. So I have a question. So the question is, why are businesses made to pay VAT on materials and not just net profit? I would say in this instance, it would be because, or when you're paying on the materials, you're paying for, like we said, with the turnover, the total cost. You're not just paying for the portion of the cost. So even with your output, when you're doing your turnover, whether it's for your business license or for your VAT filing, you're not doing your turnover for your net profit, or you're not doing your turnover for your net sales would have been deducted out your expenses. It is your total. So in that Reem, it would be the same thing when it comes to your expense. If you're not just charging VAT on the net, you're charging VAT. Basically, what you're being charged VAT from the supplier is on the total of their supply to you. So when you're claiming the actual input for that, you would actually have to do the same thing to claim it on the total and not just a portion. Unless, of course, it's a business activity, whereas a part of what they did was exempt from VAT for what you were actually charged, and then a part of it was actually chargeable for VAT. Then you would only be able to claim the VAT from the part that was chargeable and not from the entirety in that particular instance. I hope that answers the question. If it doesn't, please, again, like we say, drop the questions for us. We'll answer them as we can as we go, as well as you can email us, and you can email us, and I'll ask one of our assistants and one of our administrators to just drop it in the chat, dir_comms at bahamas.gov.bs, dir_comms at bahamas.gov.bs, as well as tax inquiries at bahamas.gov.bs. Send to either one of those emails, and as the information comes in, we'll make sure as quickly as we can follow up, answer your questions, and have those answered for you. So let's look at our net calculation formula. So VAT payable or refundable equals output VAT minus input VAT. This equation does not change regardless of whether you made more output or you made more input. The equation is always the same. If your output is $10,000 and your input is $5,000, then your formula would be the 10,000 minus the 5,000, which would give you 5,000. And then basically in this instance, the 10% owing to the government would come out of that. If it was the reverse, whereas your output was only 5,000, but the amount of expenses you had was 10,000, then in that instance, it would be the 5,000 minus the 10,000. And then you would have a minus 5,000, which would mean you would be in a position to actually claim a refund. So looking at the scenario, your output VAT is more than your input VAT. That means then you would pay to the Department of Inland Revenue. If your output VAT is less than your input VAT, then a refund would be claimed or the credit would be forwarded. And if your output VAT somehow equals your input VAT, then there would be no VAT to claim at all, and there would be nothing to actually pay. But you will still be required to file your VAT to make sure that that record is accounted for. So let me say this. we encourage persons, if you are in a position whereas you have a bad year, it happens. Any person that's been in business for any amount of time will tell you you have great years and then you could have a couple of bad years. Even if your outcome or your sales is zero, you are still required to file until you make a request to the department, to the comptroller, to request the fact to have yourself deregistered. And that in itself is also a process. We talked about that during the registration process. So we won't go over that again here today. But in that regards, you are still required, even if your output is zero and your input is zero, to still file and to make sure that you file so that you don't get any type of penalties or any type of fines. That is what we request and require persons to understand. Once you are registered for VAT, you cannot just stop charging VAT because you have a bad year or because you fall under the threshold. You are still legally obligated to charge VAT regardless of the fact that you may have fallen under the threshold and regardless of the fact that at the end of the day that you may not be making as much as you did before, or even if you decide to close the business. Now, in the instance that you decide to close the business, of course, then you would have to, of course, communicate this to us so that we are aware of it. And that would require you canceling and closing out your business in our system. Then we would understand that, of course, there's no VAT to be charged. But otherwise than that, even, and it's the same thing with the business license, I think, and we're reminding, encouraging persons of this. If you have a business license and you decide that you have 1 or 2 years that you don't want to operate your business, that is fine. However, you are still in our system going to be required to either cancel the business so that we in our system can see that you're not still in operation, or you simply renew the business. Because if you don't renew the business, then what you're going to incur is you're going to incur fines and fees for not renewing the business because the business and the system is still going to be active as a active and a live business. I had another question. Let me just see. Okay. Okay. So what if you do a refund? You may be eligible to request a refund, but only under certain conditions. Example, ongoing excess input VAT for multiple periods. Again, the refunds are not automatic and must be requested through the OTAS system. And if not claimed, excess input VAT is carried forward to the next VAT period, which means it will most likely be applied to your next VAT filing. So again, let's look at how is VAT calculated. Output VAT, which is VAT collected minus input VAT, VAT paid to supplies, equals the VAT to be remitted. The VAT is collected on taxable supplies at either the standard rate, 10% since it's 2022, or 5% on non-prepared items since 2025, or the zero rate. And it can offset with input VAT for VAT paid, but no input VAT for exempt supplies. And of course, it's paid quarterly or monthly. And you have two types of payment methods, which is basically, well, I would say three: the cash basis, the accrual basis, and then, of course, you have your flat rate method. So let's assume that your taxable supplies before VAT was 250,000. Of course, the VAT rate is 10%. And then you had to buy and purchase some supplies and stuff to keep your business going, which was basically 15,000. So what your net VAT payable would be? Your output VAT, which is 250,000 times 10%, would be 25,000. Your input VAT, which is 15,000. So your net VAT payable would basically be 10,000. So let's go back over that again. Your sales in total was 250,000. Over the course of doing business, you paid 15,000. So when you do your input versus your output VAT. Now, this is basically the VAT you paid on the services. Meaning at the end of the day, if over the course of your business collectively, your expenses was 150,000. And for all of that business that you did, you paid 15,000 on it, then basically that is what your input, your output, I'm sorry, that's correct. Your input VAT would actually be. And I want to be specific about that. I don't want persons to think that it's just that the total that you paid on your expenses. No, it's just the VAT that you paid. And so, of course, your VAT that would be paid to the Department of Inland Revenue would be 10,000, which would be your output minus your input equals your net VAT. So say what if your output VAT exceeds your input VAT? Let's assume that the taxable supplies before VAT was 500,000 and the VAT rate, of course, is 10,000. Then you would have your VAT paid on domestic purchases, which would be 65,000. So your output VAT would equal 50,000, since it would be the 500 times the 10%, and your input VAT would be 65,000. So the difference, using the same VAT formula, output minus input, would be minus 15,000, which means you would be in a credit position and a position to claim a refund. So what is a supply? A supply includes all forms of supply, but excludes anything done otherwise than for a consideration, meaning anything that does not fall under the listing of a supply. So list of supplies would be, say, sale, rent, utility goods, consignment. A list of supply of services sets out the treatment of supplies of goods and services in special cases. So this would be whereas you go in the act, define the section 2, first one, and then the line 29, 30, section 31. These would explain what these different lists are in the act. This, of course, again, like I said, is listed on the Department of Inland Revenue's website. So let's look at this a quick second. So we have a taxpayer. They have multiple business licenses. A VAT registrant, they have 3 businesses licenses registered under their 110. They report the turnover for each of their business as the convenience store is 155,000, the golf cart rental is 20,000, and the beach bar is 40,000. So which businesses must he collect VAT on? I know all of my wonderful persons tuning in, they got this. I just want to give it a quick second to see which one must he actually collect VAT on. So since all 3 businesses are taxable entities and none of them fall into the category of what we would say is an exempt or non-zero business, collectively, his turnover would include all of these different businesses. Oh, my humble, okay. So skipped ahead too far. I'm sorry, came back to this one. Want to make sure the persons online are at the same one. Okay. So this particular business, all of the businesses here would have to register for VAT because collectively all of these are actual taxable activities. So let's go to the next one. So in this instance, this person also has 3 businesses under their same tin. They have bookkeeping, fashion, and a licensed daycare. Of course, collectively, they are over 100,000. However, the daycare is 110,000. Is the daycare a taxable activity? The answer to that is no. So the licensed daycare is an exempt supply as shown in the second schedule to the VAT Act 2014. Excuse me. The exempt supplies are not taxable supplies under the VAT Act. The total of the other 2 business lines, which is the 45,000, which is less than the mandatory VAT registration threshold of 100,000. So they can voluntarily register the other 2 businesses, the bookkeeping and the fashion design, but they cannot register the daycare because the daycare is exempt and cannot be included. Is that clear for everyone? Do I need to go back over it for anybody at this point? And again, like I said, I'm taking my time going through it. I don't want to rush through it because I know there's sometimes there's been a lot of confusion about when do I have to register for VAT, which businesses do I actually have to include, what is it that I actually have to charge on and not charge on. So this is why we want to take our time and go through it. So if you have any questions, please post it in the chat. Let us know. If not, okay, I'll move on. So other things that you have to consider when it comes to being able to file for VAT. You have to consider the time, the place, the value, and the consideration of the supplies that you're actually giving and where the supplies are actually being done. So section 32, the general rule, a supply of goods and services takes place on the first to occur of the following. One, when an invoice for the supply is used, meaning when you actually have the service and you've actually supplied the service. So say, for example, and this is why our two accrual methods come in place. If you are a business that's operating under the cash method, as soon as basically you actually supply that service, you would actually be paid for that service. So in that instance, when you go to file for your VAT, that would automatically be included because you're paid the same time that you do in your cash basis. If you're a business that's going from the accrual method, you may have issued an invoice to a client, say inside December, but the client may not have paid you until, say, March. However, you have to do your filing for December if you're over 5 million, definitely inside January. That means you still have to include that invoice for that particular client under the accrual method, even though you haven't received the payment for that invoice. Let me say it again. If you're operating under the accrual basis, and this is for any business that's 1 million or more, you are automatically required to operate under the accrual basis. If you are operating under the accrual basis and you issue inside December an invoice, however, you're not paid until March, you are still required to include that as a part of your VAT sales when you do your VAT filing inside of January, even if you don't receive the payment until after. Payment in a whole or in part for the supply is received by the supplier. The goods are delivered or made available to the recipient. So this goes for your input. Payment in part or whole for the supply is received by the supplier. So if you happen to receive goods or supplies from your supplier, then you are required at the end of the day to also make sure that you include the goods that are delivered and available to you as a part of your input. Exceptions, of course, we have a decision tree listing that we've included for persons to review, and that'll be made available as a part of the information when we send the PDF for the actual presentation. And then, of course, you have real property supplies that follow the VAT rules from 2019 to 01 and supply of real property in general. Place, of course, of goods, where goods are delivered or made available, and the place of services, the location of services or supplier. Section 34 treats certain supplies of goods and services as taking place at the location where the recipient of the supply uses or obtains the benefit or the advantage. Okay, so let's look at this. A registered Bahamian business designs and builds roads in other Caribbean countries. The head office is in Nassau and is also where the civil engineers do most of their work. The site engineers live in the other country while construction is underway. Equipment, construction materials, and labor are all sourced from within those countries. Do they pay VAT? Please give Mr. Wright the option that he can actually record. You can approve it for him to actually record. My mouse is playing Bo Peep. Okay. So where's the benefit or the advantage? It's a zero type of supply considered standard rate at 10% or zero rated. We'd have to look at the tree for this because in this instance, because the service is being actually exported, it is actually zero rated. Because the service is actually being provided outside of the country, it would be zero rated. And this is in this instance because, for example, we were asked a question before when we were doing the VAT invoices. If you're doing business with a country and providing services to a business that is basically outside of the Bahamas, um, or you're receiving something from a business outside of the Bahamas, you would not be able to claim income back for that service you receive for that IBC or the international business because the service would be coming from a country that is outside of our jurisdiction. However, if you're importing any particular item, then of course the VAT that's charged on that would be something that you would be able to then consider doing VAT as a input. If the service is outside of the country, then of course you would not be able to do it in that instance. Okay. I'm just going to stop for a quick second. Okay. So I'm going to take a quick break right here for about 10 minutes. And then when we're done, we're going to pick back up. It's 11:10. So we'll pick back up 11. We'll pick back up at 11:20, 11:25 the latest. Okay. Right. Let's pick back up. Okay. I'm just going to share my screen again. All right. Want to make sure persons can hear me. Okay. Everyone can hear me clearly before I start? Good. Are there any questions before we continue, though? Just want to make sure before we get started, I'm not going too fast for anybody as we're going through. Okay, that's it. Okay. All right. So picking up from where we were. So value equals total consideration. Exception, supply of hotel accommodation has specific rules for them. Supply of real property also has specific rules for them. Section 37 speaks to has rules, special rules for supplies related to persons, change of use, credit agreement, repossession of goods by creditors, tokens, self-supply of going concern or disposition of all or part of a taxable activity, cancellation of registration or other supplies as per regulations. So consideration based on section 36, 2A, an amount paid or payable for the supply by any person directly or indirectly, a deposit on a returnable container, any duties, levies, taxes, other VAT paid or payable on or by reason of supply. Recipient, certain provisions relate to a particular type of recipient, example, an agent, representative, non-resident, self, etc. Other provisions depend on the relationship between the supplier and the recipient, example, related parties, a port licensee or exempt person, etc. Now, this will be included, the decision tree will be included as a part in the presentation itself that you can review at your discretion. What we will also be supplying is, along with the PDF link, we'll also be supplying a link for the step-by-step walkthrough for which each line is for the VAT filing, but I don't want to jump ahead of myself. So domestic taxable supplies made by registrants are subject to VAT at a particular percent rate, but it's standard zero other, and the value of the supply times the VAT rate equals the output. You may not need to consider all factors in the analysis, nor follow the same sequence. If it moves, it is likely a supply. So we would encourage you, like we said, follow the money or the equivalent to identify the supply whenever the transactions are completed, or if you're having difficulty understanding it, we'd encourage you to utilize this, which we've actually included as just a refer to for when you need to know, first of all, where, the time, the place that the supply was made. And these are all things that are actually in the act that you can refer to at any point in time. But this also gives you an example of an idea of where the supply was made, the time. So when you're considering whether something is actually viable supply or not, these are the things that you would want to utilize as a reference. And of course, we've also included this as well, within the presentation so that you have it actually as a reference for you. So let's just look at our standard rate versus our flat rate. So we discussed this in the training that was actually done previously for registration, where we talked about you can register for a the standard rate, which most businesses are registered for, as well as a flat rate scheme. The standard rate is basically general. As soon as you register, you have the option to actually do that. As long as you are under a 400,000, and it is still at the discretion of the comptroller or the acting chief valuation officer based on the provisions that you provide in your request. That's the easiest way I can say it. With the standing reporting rate, which is 10%, and now also 5%, and the 5% is again on only non-prepared food items. The standard 10% or 5%, you are able to charge output VAT, which is on all of your sales, and you are able to claim input VAT on all of your purchases. That is standard. You have to be, again, at least 400,000 or below in order for you to be able to make a request to utilize the flat rate scheme. Now, with the flat rate scheme, it is 6.5% across the board. Say, for example, you make $10,000 as basically that's your gross turnover. Then you would multiply that by the 10.5%, and that would be basically what is submitted to the government. That's it. There's no input to claim with the flat rate scheme. And with the flat rate scheme, at the same time, it doesn't affect the 5%. You would still have to charge a 6.5% of basically what it is that you would actually be turning in as your supply. Now, the benefit of this, the flat rate scheme would be depending on what your output and input is. It may be more financially beneficial to you to utilize that or to utilize the standing reporting method. That is something each business has to decide for themselves. So let's just look at it real quick. So who uses it? Standard rate, most businesses, which is basically charged on the 10%. Of course, they can claim back input VAT with invoices. Their calculation, of course, is output minus input VAT, which would be their VAT payable. They have to keep detailed records and invoices are required. Any registrant can utilize it, and medium to large businesses with high expenses. The flat rate, of course, small businesses with low expenses, because basically it would be a benefit to them. They charge still at the 10%. So the VAT that you collect would still be charged at the 10%. However, the VAT that you turn in will only be 6.5%. So that means if you've collected basically 10% on whatever your total gross is, what you're then turning into the government would only be 6.5% of your total gross, not the 10%. So the difference is what you would actually keep, and you would remit the 6.5%. This can only be done again once you are actually registered for the flat rate and below the 400,000 and meet the other requirements. Of course, you cannot claim input VAT. So that is the offset. You will not be able to claim input VAT in that sense. And you pay a fixed percentage on your total revenue. It's simplified record keeping because basically you're only calculating the 6.5 against your whatever your total gross is, and then that's what you remit. There's no subtraction of the input versus the output. It's none of that. And of course, it has to be approved by the comptroller, and it's low expense or cash-based businesses that can actually benefit from this. So now let's get into the nitty-gritty, how to file for VAT. So we're going to do this in two ways. First, we're going to go through the process of on our OTAS system, on our online tax administration system. And then I'm going to go through the lines that you actually have to utilize in the process of filing. So I'm going to walk you through the first part, which is the process of going onto the system. And then we're going to go through the lines, each of the lines as we go through. Now, what we've also included for you, pardon the noise. What we've also included for you is also to ensure at the end of the day that you're able to also get a handout that will give you each of the lines and what goes on each of the lines. We are still in the process of updating the handle with the 5%, which won't be done until, I guess, May. That'll be our first filing period for that. But once that is completed, we will also make that available to persons as well. So the first step, of course, is to go to inlandrevenue.finance.gov.bs or vatrevenue.gov.bs. And from there, basically your next step would be to log in. At this stage, we would already assume that you actually have an account. Okay, just give me 1 moment. Just give me 1 moment. Okay, let me know if you can hear me clearly. I just had to make a quick adjustment to the microphone. All right, sorry about that. With all these technologies, there's always some technical issue to fix. All right, just wanted to fix that to try to reduce any additional noises. Okay, so first of all, again, you would go to website inlandrevenue.finance.gov.bs, or you can go directly to vat.revenue.gov.bs. Let me just share the screen again. And at this stage, what we would assume is you've already created an OTAS account. You've already set up the file for VAT. Now, what you're actually doing is just logging in to start your VAT filing and your VAT filing process. So basically, once you're actually at this stage, you would then basically just log in. Once you're actually logged in, your second step, of course, would start the process where you would go to returns, click on file a return. Where it says tax type, you would select the tax type that you're doing because you have a number of different options that would actually come up. In this instance, you would select VAT or VAT return. You select the year that you're in, which would actually be for 2025. And then what you want to make sure is you want to make sure that you select the period for your VAT filing, because that's a mistake persons sometimes make. If you are doing a monthly filing and you are coming out of December, then your next filing period will be in January. Sometimes persons may accidentally file for the February for March. If you're doing quarterly, it would be the same thing. You want to make sure that the filing period that you're filing for is the correct filing period, because then that is another reason sometimes persons get penalties because they file in the wrong period and pay in the wrong period. So this is just a reminder. We want to tell persons, we want to just ensure that they are filing and paying in the correct period that they're supposed to be doing. So once you've already selected your filing period, then you'll be brought to this screen, which would actually show you at the end of the day all of the different lines for your VAT filing. And we'll go through the lines as well as the handout that we give you will assist you. So the first part would also be for you to put in your output VAT, I should say, and the lines will show you. And you're not putting on every line because there are some lines that are automatically calculated. Don't mind if I have to say 7.5% is just an old screenshot that we're using. It will have the 10% as well as lines will be added for the 5%. But what you want to make sure is that you're putting in only on the lines that you need to put supplies and information on, and the other ones will be calculated. And you also want to make sure you're putting it in correctly so that it is properly calculated. Then, of course, we would have the information where you would put your input information for your VAT, which would be any of the purchases and stuff that you made. And then at this step, you would upload your required documentation and your support. And your documentation and support would include any of your VAT invoices, whether it's from your sales or your VAT invoices from your purchases, to make sure at the end of the day, the information is correct. And when it's checked by our general processing, everything is in order. We encourage you definitely to utilize the output worksheets and input worksheets. Persons have asked us about these. We do not supply these. If you look, these can be done in a simple Excel format spreadsheet, or if you utilize QuickBooks or one of those, the information will be there for you to just put in a simplified format that would go along with the other documentation that you have, which makes it easier for us also to be able to go through and check for what you supplied to make sure the information is correct. And once basically all of the information has been input, sorry, once all of the information has been inputted, your total will be calculated and it will tell you whether or not you have a credit with us or basically you have monies owing to be paid to the Department of Inland Revenue. And what you can also see to the bottom underneath the supporting documents, it will list all of the supporting documents that you've actually uploaded to make it easier for you. And once that's done, you confirm the information is correct and true. And then you select yes to complete your filing. And then you will get a notification like this, as well as something to your email saying that your VAT filing has been completed. What we encourage persons again and again is to please remember, once you've gone through all of the steps and you've gotten to this point, if you do not see a notification in your email, in your spam, before you go through the process of making a double payment or something else, please contact us. We just want, and it may be a simple system error, it may be something in email, but we would prefer you to do that than you to go through the process all over again when you may not need to. So this handout, which gives you the VAT lines and tell you what goes on each line, is something that we actually we'll make available when we send the PDF on the presentation, as well as the link for the guide. It's already on our website. on the Department of Inland Revenue's website, but we've also made it available as a PDF shareable link to you so that you also have it as a guide to assist you in case you want to go through. So you need to be aware of the content and structure of the VAT return so that you can isolate areas for further review, assess reasonableness, and plan your audit. Taxpayers file, of course, their returns through our OTS system, which we just walked through, and you're encouraged to attach your worksheets that show their calculations. Many fields are, like I said, automatically calculate lines 5, 8, 9, 10, 16, 23. They automatically calculate, so you don't have to put any information into them, but you just have to make sure the information that you're putting in is already correct to the fields that you're entering the information in. And of course, I mentioned this already. This is our VAT guide. It is on our website, and you can download it at any point, but we will also send you the link for those persons that are part of the training today that have made their emails available to us so that we can make sure that you can have all of the information available. So what do you need to do? So say, for example, when you are actually inputting your VAT, you have to make sure that first you're using the correct rate. But then in addition to that, because in the instance, like how we now have both the 10% and the 5%, you have to make sure for what it is that you are calculating the VAT for, you are utilizing the correct rate to get the correct amount of what you need. So say the amount that you paid is 11,100. That is the VAT that you're supposed to be submitting, say, for your output. Then what you would do is calculate that times 10 divided by 110. And if it was 105, it would be 5 divided by 105 to give you your amount of your VAT. And then what you see is you take the 11,000 minus out the 109, which would be your base price before your VAT. And the reason you need this is because as you go through on the lines, we show one of the lines, you actually have to put your amount. That is your amount without your VAT. And then you put your line in where the VAT amount is supposed to be. And it will also do the calculation automatically for you. So you have to be able to separate the difference between, excuse me, the amount base price before the VAT and then the base price including the VAT. For the flat rate, like we said, the annual turnover is less than 400,000. And in this instance, now at the 10%, it is 6.5% that you just basically would calculate your flat rate for your total turnover. So some common filing mistakes we encourage persons to please avoid. This will be our next part. One, failing to report all sales or underreporting their output VAT, not including all taxable sales, especially cash sales or small transactions, using incorrect VAT codes or leaving them blank. We didn't give an invoice, so we don't report it. All taxable sales must be reported, invoiced or not. Two, claiming input VAT without valid invoices. This is why it's so important for your VAT invoice to be correct and have all of the pertinent information that you need. And claiming VAT on purchases without a proper VAT invoice, using receipts or non-compliant invoices as proof. A VAT receipt is not a VAT invoice. Let me say it again. A VAT receipt is not a VAT invoice. Claiming VAT on personal or unrelated expenses. You can only claim input VAT with proper documentation showing. An example would be a vehicle that you claim is a company vehicle, but you utilize it for personal runs. That vehicle and any gas that you do from that vehicle or thing cannot then be claimed as a company vehicle because you're using it for personal. If you do it once, you can't utilize it. Let me say that again. I sure a couple of persons be like, what? It was something I had to learn myself. If you have a company vehicle that you're utilizing for personal runs, that company vehicle cannot be utilized in your input if you're claiming for repairs, gas, or anything else for that company vehicle because you're being using it for personal items and personal use. I paused for a second to see if I get any comments from that one. Okay. 3, incorrectly categorizing supplies, misclassifying exempt, zero-rated, and standard-rated supplies, applying VAT to exempt items, example, residential rent, educational service, not splitting mixed supplies correctly on the return, and you have to make sure you match your correct VAT category and use the correct codes, which is T for your like your standard, zero rated, or E for your exempt stuff. And failing number 4 to adjust credit and debit notes, not reflecting credit notes issued for return goods or overcharges, forgetting to add debit notes for undercharged sales may result in your output VAT may be too high or too low. All notes must reference to the original VAT invoice and be applied in the same or next period. And number 5, filing again, like I said, in the wrong filing period or entering sales or purchases in the wrong tax period and making a payment to the wrong VAT return or matching the reference number. We encourage persons to check, double check, triple check, quadruple check the VAT period selected in the OTS and to make sure you're submitting to the right period and paying in the right period. And number 6, neglecting to file if no sales were made. And this is something I mentioned before, belief that no sales means no return. As long as you are registered for VAT, you are required to file. Even if that filing is 0, you are still required to file. So to avoid common mistakes, we encourage persons just to support your calculations. Always maintain sale records and valid VAT invoices issued. Purchase VAT invoices for all input claims. Credit and debit notes applied in the period, and summary spreadsheet or system reporting showing calculations. Before your pre-filing checklist and before submitting a VAT return, we ensure that all sales for the period are reported. Your input VAT is backed by compliant invoices, and your credit and debit notes are included. And of course, the correct VAT period is selected. Totals and references are accurate, and a payment plan is, if it's needed, is actually in place. Okay, so before we get to part 6, which is going to be our practical exercise, let me just exit for a quick second. This is not the one I want to share. Let's see. Okay. I want to make sure the right one. There we go. Okay. So let's go through this. Like I said, this is on our website. I may skip down through some of it, but I just want to give a general idea for persons in the process of utilizing it to show that the information that you need is there to assist you and to make sure that you're able to get the information to guide you as you go through. The guide is intended to provide a step-by-step instruction on completing the VAT return for both the standard and the flat method scheme. So for the standard method, of course, line 1, you would put 0 rated supplies. You'd enter the total amount of the 0 rated supplies that you've made during the period. And of course, you refer to the VAT guide that gives you an idea of what stuff are actually 0 rated supplies. Say, for example, like I say, a school that has both tuition and they have a bookstore or they have other means that they raise revenue. The school's tuition may be 100,000, and then the bookstore's stuff may be 100,000, which means their total gross is 200,000. Of course, they cannot claim VAT on the zero rated items because they're actually exempt supplies. So In that instance, those things would probably go on line two, which would be exempt supplies. However, say you're a marketing company that's providing business to a company outside of the Bahamas, you are then actually going to have to take that particular revenue because you can't charge VAT on it because it's outside where the service is being provided, may be outside of the country. That amount of your turnover would go on the zero rated supply. So into the total amount of zero rated supplies that you've made during the period. And of course, the guide would tell you which stuff are zero rated. Exempt supplies, in the same thing, you would enter your total exempt supplies on line two. Line three is bonded supplies, which is only for Grand Bahama Port Authority licensee. Line four would be your taxable supplies. Excuse me. This would be your value inclusive of VAT. Of course, it would be at the 10%, and then it would be at the 5%. So line four would be your value inclusive of VAT. Line five would be the VAT collected on the standard rate supplies. So your line five would be where you would actually enter your VAT. So as we did the calculation before, whereas in this instance, it would be 10 over 110, or for the 5%, that line would be 5 over 15. If you had any reverse charges on your VAT or imported services, that would go on line 6. Any adjustments for the period would go on line 7. So you would enter any adjustments that occurred in the current period where the original sale or purchase was reported in a previous period. If you have issued a debit note to a client, or if you receive a credit note from your supplier, this would be the line that you would use. If you use the accrual accounting scheme and have written off debt uncollected or recovered any amount of bad debt previously written, then you would put this here for the adjustment for the period. And then, of course, your line 8 would be your supplies, excluding VAT, line 9. And these are some of the lines that are going to be automatically calculated. Like I said, I'm just going to go through. I want persons to have an idea that this is available to assist with any of the things that they're doing. So when we look at our purchases, of course, the value of domestic purchases of capital goods and services. So this would be for your input, where you put your information starting here for line 17 for your input. Domestic purchases, value of domestic purchases for operating inputs and non-capital supplies. Domestic purchases, VAT paid on the domestic goods and services. And then your total VAT paid on domestic purchase. So that would be automatically calculated. And of course, depending if you have mixed supplies or not, you would also have a line that would actually be able to calculate that to show that for you on the field as well. Line 25 would, of course, show any of the adjustments that you actually had. Line 26 would be your total input. 27, your VAT payable. And then as we showed before, you would see your total calculations once everything is done. So let's look at the flat rate scheme. If you're utilizing the flat rate scheme, your line 1 would be the total of sales and supplies for the periods and your adjustments. So you would enter the sum of all sales, including exempt, bonded supplies, zero rated, and standard rated supplies, and including VAT. And if there are any adjustments to the output from the previous period, such as refunds or rebates, you would deduct them from the total supply. And of course, the rate would be the percentage on line 2. And of course, there's no input. So it's even a shorter form for your flat rate, because your flat rate is only about 9 lines, where your standard is up to about 30 lines, and that may probably increase by 2 or so for the 5% that's going to also be added. Okay. So like I said, I just wanted to go through the show persons. If you need assistance, if you get lost at any point, if there are additional questions that you can't reach us directly, you still have available the guide. And if there are things in the guide that you have questions for, please let us know. But this information and all of these things are available on our website to assist you, to walk you through the process, and to help make sure at the end of the day, you're able to get the information that you actually need. So our last thing, and this should bring us shortly right before 12:30. Is we want to go through practical exercise. And the design of the practical exercise is for a business from Sydney's Boats, because who doesn't love taking a good trip on a boat? Where we're going to look at the how his outputs are, how his inputs are, and how those are calculated based on putting them actually on which lines, as well as the breakdown of discussing a little bit about what inputs could be accounted for, what outputs could be accounted for, and what can't be. So, so Sydney's Boats, Bahamas, a little bit of background information. He's a sole proprietor, which means all of the businesses that he has falls under one tin, and most likely he's going to have multiple business licenses for the different businesses that he operates, but each of them will all be only included under the one tin. So, sole proprietor Sydney Carmichael, trading as Sydney's Boats Bahamas, registered for VAT in 2016. He operates out of a family owned private marina located on New Providence Island. He buys, sells services, and stores a wide range of vessels, offers dry dock service, repairs, and refurbishment. He sells Rubus marina fuel under a license. He provides slip rentals and merge on an hourly, daily, weekly, monthly, and annual basis. Customers include both commercial and non-commercial vessel owners. Sydney's family lives in a large house located at the marina. They rent out a couple of the bedrooms through Airbnb during peak holiday periods. They sell branded merchandise, t-shirts, captain's hats, toy boats, example, through their online portal and from the marina, and they offer pleasure trips around New Providence and to the Family Islands. Bookings could be made individually or in groups. They employ mechanics, a marina harbor master, and contract boat operators for sightseeing trips. And their three high school age children all work part time at the business. I sound like I need to buy a marina. I know for sure. So let's look at Sydney's output VAT. From Sydney's scratch notes below, what did he put on his VAT return? One, March fees received daily and weekly was 27,000, including VAT for all 3 months. His slip rentals, which were long-term monthly billings for a total of 15,000 per month, VAT inclusive. His repair and refurbishment charges were 1,175,000 plus VAT. His fuel sales were 5,000 plus VAT. His specialized repair work completed by Sydney's mechanics on a U.S. registered commercial vessel was 70,000. Subcontract repair work built out by Sydney but completed by another marina was 11,100 plus VAT. And he had to write off as bad debt an unpaid 40,000 repair bill for which VAT was collected and reported. He collected contributions from friends and family for the New Year's Eve bash he and his wife hosted every year from $75 from 100 persons, and he deposited the money received into his business account to help pay for the food and entertainment. Merchandise sales from the gift shop totaled 6,975, including VAT, and pleasure tours conducted during the quarter totaled 45,000, including VAT. And he rented out Airbnb rooms in the house for a total of 50 nights during the quarter at $150 per night. No VAT was actually collected. All right, so let's look at Sydney. So the first one is March fees collected. The March fees were daily, including VAT for all 3 months, and he charged by the foot. Additional supplies and services can be provided, including cleaning, restocking, and fueling. Okay, excuse me. His slip rentals were long term, so the monthly earnings total was 15,000 per month, and I billed the customers as VAT inclusive. He had his repair and his refurbishment charges for a total of for the quarter, which was 1,175,000. This doesn't include fees for the service work done under item 5, repairs of foreign vessel. Fuel charge was 5,000 plus VAT. What he charged, he made 5,000 plus VAT, includes marine oil sales. He had repairs of foreign vessel, and the customer paid 75,000, and it was a Panamanian registered boat. Number 6, the repair work was subcontracted out, and he had some bad debts to write off. Of course, he also had a New Year's event that he collected contributions from invitees to the New Year's bash every year, and 75 received from each of the persons attendees. And the gift shop sales. Excursions, 45,000 including VAT. He didn't keep track of the tips received because he doesn't have a separate business license for this business activity. Short-term rentals, he rented out the Airbnb in a house for a total of 50 nights during the quarter at 150. No VAT was collected. He does have a separate business license for this activity. Okay, so let's look at his returns. So line 4, which would be his taxable supplies, including VAT. So line 1 was the $27,000 because why? It was a zero-rated item that was actually done. So it's on this line 4, 27,000. Then he has the item 2, the 15,000 times the 3, the 1,000,000, 5,011, and the 45. So his total taxable supplies was the 1,442,435. On line 1, he has the $70,000, which is this. This was the foreign vessel. Remember, like we said, although he can include it because the service was done where the benefit of the service was outside of the country to a Panamanian registered boat. It was not a Bahamian registered vessel. Although he can charge that as a part of his turnover, it is a zero-rated item because he can't charge VAT on this particular item. It is still a part of his gross, his total turnover, but he cannot charge VAT on it because it is a zero-rated item. So line 5, what he would put then, he would use the fraction tax that we showed, which is basically where he would take the total of the 1,442,435. Since the rate is 10%, he would multiply that by 10 divided over 1, which is basically, and that would give him $131,130.45. That would be basically what he would put on that line. For VAT, for the line 5, for his VAT on his taxable supplies. That is what he would put on that. His line 4 would be his total, which is the 1,442,435. His line 5 would be the total VAT on his taxable supplies. Pardon me. And of course, his line 25 would be the adjustments that he had to make for the period, which would have been the 40,000 times the VAT rate. And the 40,000, let's look at it real quick, was here where he had to write off the bad VAT repair bill. Now, as you notice, nowhere you see any funds for this, where he collected the New Year's event, because first of all, he couldn't account this. This was not a part of his business. Secondly, the mistake Sydney made with this is he actually deposited that into his business account. So when he's actually doing proof of his stuff, you're going to see that inside there, but that's not actually a part of his actual return. Item 8 is personal, no VAT collectible. So let's go back to item 8. That's what this was. This was a personal thing. There was no VAT that could actually be collected on this. Item 11 would be an audit adjustment because he didn't report it. And that would be this. The rented out Airbnb rooms. He would have to include this since he has a business license for this. This has to then also be included as a part of his overall gross because it still falls under his 10. And at the same time, because he didn't charge VAT, he also has to charge VAT for it. So he would actually have to account for that VAT that wasn't actually charged. So any questions on that about the output aspect of things before I move on to talk a little bit about the input? Okay. All right. So what qualifies as an input deduction? What does the legislation say and how are they calculated? So the rules relating to a claim for input deduction. A claim for input tax deduction for input tax paid or payable by a tax person is not allowable where subsections 80K cover the many different requirements. It's written as double negatives, and we'll discuss each one in detail. So let's look at Sydney's input. So the first one is Sydney purchased a boat, purchased a 2019, a vessel from the Bahamian who lives in Abaco. The total is 1.5 million. He used the bill of sale as proof of the purchase for the VAT. Can Sydney claim input? What do you need to do? Okay. Two, insurance policies. He paid insurance premiums for the year, fire theft, liability, home, auto, medical, life for a total of 10,000. The invoice didn't show VAT, so Sydney added the imputed embedded VAT at 10.10 to his return. Number three, the captain for hire. He arranged for services of an experienced captain to conduct a day trip for a group of 10 persons who arrived on a cruise ship from the previous evening. The captain provided his own vessel. Sydney's boats charged each passenger $350 for the excursion and properly charged VAT to each customer. The boat captain charged Sydney $1,500 for his services and for his crew, and Sydney also filled up the captain's catamaran for free after the voyage. Can Sydney claim and put a VAT on this? Fuel costs. The invoice for Rubus for last month's delivery shows separate amounts for marina fuel and regular fuel. The pumps at the marina only sell marine fuel. There's a raised tank in the yard that you notice when you happen to pass by the marina one day. The field auditors would have seen it when they attended the premises for an initial interview with the taxpayer. The full invoice amount and associated VAT was included in the quarterly. What types of issues can you think about this situation? In this instance, you would think about the fact that he only has a license for the marine fuel. How does he account for the other fuel? As a fun one, Sydney paid the telecom bill for the month. It includes internet services, cable television, and cell phone services for 8 mobile phones, one for himself and each member of his family, plus the 3 mechanics who were always on standby. Sydney transfers the total invoice amount and VAT paid to his VAT calculation. When you look at this, what comes to mind? First of all, how many persons work for Sydney? His wife works with him, his 3 kids, then he has his mechanics, and he has him. In this instance, what you have to take in consideration is those kids don't need to have phones. So most likely, if Sydney gave them phones, they're using it for personal use. And because they're using it for personal use, Sydney can't claim any kind of input VAT on that. The phone that he has, his wife, and his mechanics, those you can say can be accounted for work services. But we know for a fact, even though those kids work there part-time, those phones that those kids have are most likely for personal use and not for business use. Of course, the Independence Day celebration, Sydney hosted a Bahamian feast for persons, and the total cost was $7,500, including the VAT and food. Sydney paid $5,000 for professional fireworks to put on a show. Of course, he did the same thing for tourists during the 4th of July. Would that change the thinking regarding whether ITCs can be claimed? In this instance, we would still say no. Why? Because it's not a service that he provides underneath his license. Several boxes of T-shirts and other branded merchandise were delivered to the front shop, totaling 5,000. The merchandise came from China and cleared customs, so there are any issues. Sydney family proudly wears the T-shirts, yes, because these are items that he purchased to help market the business, so that would be included. Purchase of a new BMW. Sydney purchased a new BMW for 75,000. He states that the vehicle is used over 90% of the time for business. Can he claim input VAT on the purchase price? I want you to think about this one good now. Sydney have a marina and a boating business. Let's be honest about ourselves. Where in the world you taking your BMW talking about? You going back and forth to be lifting any stuff for your business. Let's be honest and real about this particular one now. If it was a truck, that may make a difference. But for something that we know as a luxury car, there's no way in the world you would be able to claim this as a part of his input. Instead of paying the accountant for 2,000 fee, they prepare the annual Business license turnover attestation. Sydney instead took the accountant and her family on a one-day excursion from Exuma. Accountant was thrilled with the experience and decided not to invoice Sydney for the work. Sydney calculated ITC for 181 since it was clearly a barter transaction. Okay, so we've already actually gotten past that. So, any questions? We were just looking through those as some examples of what we would have actually done. And this is just something just to remind persons of for the credit notes and the debit notes. A credit note is issued by a VAT registered supplier to reduce the amount originally charged on a VAT invoice. And it could be any number of reasons. The goods were returned by the buyer, a discount was agreed after the invoice, the original VAT invoice overstated the amount of services. A debit note is issued by the VAT registered supplier to increase the original charge. And this could be for any various reasons, including the fact that the debit, there was errors in the amounts, something doing with the rate, the additional goods or services were purchased after the original amount. So just a couple of reminders. First of all, we encourage persons to go to our website, inlandrevenue.finance.gov.bs, where basically any information that you need on VAT, business license, we have there, as well as all of the guides, the amendments that are made. We remind persons to please make sure when you are making your bank payments to use the correct information. We have at least over 10 different accounts for various things within the department. So we encourage you to please make sure at the end of the day that you are using the correct banking information. And the government of the Bahamas has over 60 something different accounts for the various government departments. So you need to make sure when you're making your payments for your VAT filing, if you're doing it through the bank, give yourself at least sufficient time for it to hit the account on time and make sure that the information is correct. 3, use the portal to communicate. We encourage persons to use the portal to message us, to communicate, and it also holds a record. So if something happens, you don't just say it's word of mouth, you also have, when you put it in the portal, as a remembrance for when you needed to do the service. So some key takeaways: the VAT filing deadlines are the 21st at the end of each month. Remember our input versus our output, whereas our formula is output minus input. Use our OTS system for filing. Adjustments must be handled properly to make sure whether you have credit notes and debit notes. Avoid common filing mistakes to the best of your ability. Use a checklist if you need to. Keep good records. And so for our upcoming model, we're going to be looking at the VAT payment process, of course, the payment deadlines, how to pay, using the steps both on our system as well as making a bank transfer, credit card, and making sure you understand what you need at every process, dealing with any payment errors, any penalties for late fees. So we just want to thank you for your participation today and staying with us. So I see a question: phone charges, gas, and new vehicle is considered. It is the use of the service for CTX mechanical. So if the phones are basically what you've gotten for work, you know, you have business lines and business phones that you can do, that's easy to account for. The vehicle, the same thing. If you've purchased a vehicle for the use of the company, that is a difference. However, I say it again, if you purchase a vehicle and you registered that as an input VAT, but it is found that you've used it for personal reasons, you will not be able to count that as a business vehicle, even if you use it only once. So if little Susie and Josie Marine had to go to daycare and you had to take the company vehicle to go pick her up, that company vehicle cannot be considered a company vehicle. Don't shoot me, I just the messenger. Okay, let me just check the room. Right. Stop sharing. Okay, there are no questions inside the room. Awesome. So I want to thank you for spending your time with us today. I would say give us until today, tomorrow, to be able to send you the PDF links as well as the quiz. The quiz may be tomorrow. You have at least 2 days, 3 days after the quiz has been sent to complete it. If you're interested in completing the quiz to be able to get your certificate. And I want to thank you for spending the time with us today. I just want to close out the same way we opened up. Father, I thank you for your grace and mercy. I thank you for everyone that was on this line and a part of this training. I pray, God, that you continue to keep them, guide them by your grace. In Jesus' name I pray. Please have a good and a blessed day. We look forward to seeing you tomorrow when we continue for the next model.